All right, fire them up!
All right, so what do we got here? Welcome again, everyone, to day-to-day investing day-to-day.
D2D, double D's. Yeah, so we had a nice 2-week vacation.
Yes, we did.
So we haven't touched the charts. We haven't really done much. Just staying off the markets, making sure we're safe, keeping our profits. So what do we got for some news here? So we got the stimulus. That was good. Congratulations, everyone.
Yeah.
Who got it. So now where we're at, 2 weeks later.
Oh, yeah, let's go buy a car.
Tesla?
Just kidding. Yeah, nah, the Cybertruck's not doing too well. It doesn't even have bulletproof glass. Come
on. Anyway, so Powell and the Treasury Secretary Yellen, I think that's how you say her name. They were on and off for like a good solid week, right? They were grilled left and right. So Powell is saying that the stimulus package, this is a big concern that came up. It's not likely to fuel unwelcomed inflation, as they testified in the government's pandemic relief efforts. So people's concern is that with all this money that's being given out for all the trillions of dollars that's being given out for payments and things like that for economic relief programs throughout this pandemic, is going to cause some sort of inflation or lead everything to inflation.
Which makes sense, right? Because you put more money into the populace, and the value of the dollar is going to go down, right?
That's the general thought behind it. So what they're promoting with this with the stimulus reliefs and all that is they want to promote consumer spending, which should lead theoretically into improving the economy and just increase prices on consumer goods that way, I guess. So after the $1,400 payments were given out, which included some of the unemployment benefits, Powell and Yellen, I can't say her name, I'm sorry. They're saying that they're expecting a strong economic rebound this year, as the vaccine distribution accelerates and there's still social distancing measures, which I still don't see, ease and economic activity picks up. And I'm not sure how to feel about this. What do you think on this?
Well, I mean, we already had 2 stimulus runs, and I'm pretty sure we talked about this in a previous news report, and we didn't really necessarily see a lot of spike in sales or retail. I think most people are probably utilizing the money either to save and invest, or they're probably just holding on to it, or I know I personally am not saying like, oh, $1,400 or however much. Oh, I'm going to go out and buy, 1,000 Hot Wheels, or I'm going to go out and buy a new bicycle. Some people do that. I know that, but I think for the most part, people are saving the money or investing it or using it for, other not necessarily recorded activities, maybe gambling or, whatever, eating out.
Yeah, and I'm not sure you can even say that they're paying their bills entirely, because you do have the rates are trying to get pushed down. You also have this deferment on the mortgage payments still until September. People are probably still holding off. So whether they're saving money to invest in the stock market, for example, it's a different story. It'd be interesting how the year develops for sure. Let's move on to the second article. How's that sound?
Sounds good to me.
So we got this article from Wall Street Journal. Negative rates in Europe is making homeowners get paid to borrow money. So
yeah, how exactly does that work?
So negative interest rates, they are going to cause an overall drop in the stock market. and it basically takes away any confidence in the U.S. economy. So
Yeah.
this is just speaking, if this were to happen here in the United States. This article in particular speaks to Europe, which Europe economy is really going down right now. So some industries get hit harder than others. Banks, for example, their profits just go dead.
Okay.
Be dead. And now real estate are one of the few sides that don't get hit as hard. They actually profit from this because the negative interest rates spread. The property investors, they take borrowing. They're able to borrow. They're able to borrow at a cheaper rate.
Mm-hmm.
So mortgage rates. So if we see negative treasury yields, we're not likely to see mortgage rates go negative. But if mortgage rates move in line with the treasuries, then you would see them go down. So
Okay.
like, for example, in 2019, you had a 30-year fixed mortgage at like 3.8, 3.5, something like that. Meanwhile, the 30-year treasury was around 2%. Now, if the 30-year treasury yield went down to like a 1%, let's say, you can see the 30-year mortgage rates go down to like a 2.5, which kind of did. So that's how they would profit from this. Is it would be cheaper to borrow money overall.
Gotcha.
So as the Fed raises interest rates, it helps cushion the economy against inflation. But because the higher rates make borrowing by consumers and businesses more expensive, it lowers the interest rates when the economy is facing some kind of recession, for example, because it doesn't force you, but it incentivizes people to borrow and spend, which in turn, as we can understand, it stimulates the economy further. So it kind of evens out with the recessionary times and so on. So now, if you get negative interest rates, the central bank, when they do this, that means that it falls below zero, obviously. So in theory, it kind of boosts the economy by incentivizing consumers to take more risk by borrowing and lending money. But at the same time, this helps fight deflation by making it costly to hold on to the money. So that's how they promote people to spend the money. So I don't know if you recall back in early, was it like 2014, 2012, something like that. I don't exactly know the year. I can try to look that up later. But where you would have savings in the bank, and in some banks, some instances, it would cost you to keep the money in the savings account.
Yeah, I remember.
Like personally, I had a Chase account, and I remember they had like a $500 minimum, unless you had like a student account. And if you didn't meet that minimum, then you would get charged $12 to $25, something like that, ridiculous. But it would cost you money to hold an account open, so you couldn't keep the money in the account for a long term. So see, in this article, in Denmark, more borrowers have seen their rates turn negative, although in most cases they're still paying their banks because of an administration fee charge. That's because the banks are making money. Now, mortgages are not directly financed by the banks because they don't set the terms, but instead they serve as a type of intermediary by selling bonds to investors at a specific rate and lending the same amount to the borrower for the same rate. So in Denmark, the biggest mortgage lender said that 50% of his loans with an interest period of up to 10 years have a negative rate before the fee. And that portion is rising because the mortgages tend to have their rates adjusted every few years. And to give you an example, that it costs you about $190,000 to buy a house. And if your interest repayments for the first 5 years were set at 0.06%, in January of this year, the rate was revised to minus a quarter of a point, a quarter of a percent. So do you believe in this theory of inflation that a lot of the media is promoting?
I mean, it makes sense because we're pulling this money from somewhere, but I don't agree with the previous comments where, oh, you know, we're gonna send out all these checks and people are just gonna go right away to the stores and buy stuff. That doesn't really make sense to me. The idea of inflation makes complete sense. I thought you had a different opinion on that, though. Yeah, you were saying that you had mentioned something about the opposite happening now.
Yeah, so I have a theory that I think deflation is going to happen instead of inflation. And so, do we understand what inflation is?
Yeah, inflation is, well, I understand where it would come from with the government creating more funds, if you will. Basically, more funds you feed into the populace, the lower the value of the dollar goes up until a certain point. But that's, I guess, if that money is not circulating back into the whole system, right?
Right. So what you brought up is inflation through the monetary inflation, which could lead to the worst type, which is hyperinflation. But there are other types. So you also have hyperinflation tends to happen with like high military spending, for example. There's also asset inflation, which you kind of see through the stock market after we had the COVID drop, where it's getting expensive to own any particular stock. That would be considered an asset inflation. Another form of that would be like oil or gas, where they spike. So commodities would be another side that would get affected by that through anticipated rise in demand and such when traders bid up the prices. And I think we saw negative oil prices, which is kind of interesting.
Right.
Was that last year? Wasn't check a time.
I don't recall.
It's like negative something for each barrel. It's kind of crazy. So now it's another type, which is where the prices rise 3% a year or less. And that's when the economy is doing well. You know, that kind of happened in 2011, for example. Then there's another type, which is pernicious inflation, where prices increase 3 to 10% a year, enough for people to stock up now to avoid higher prices later. And you kind of saw that through the COVID thing, where people just went out and just bought up everything, toilet paper, for example, which I still don't understand. But like there was a ton of food. Why'd you go out and get crazy with toilet paper? Anyway.
Yeah, I don't know.
And Armore's toilet, sorry, not to get into this, but Armore's toilet's next to a bath, a shower. Like that's
you know.
You're the cleaner than you did wiping yourself, you know. Anyway.
I wonder if bidets sold out also.
Yeah, imagine. But anyway, so to that kind of inflation, suppliers and wages don't keep up with it, so everything becomes more costly and it's harder to afford a living, right? So that leads to shortages and prices go so high that obviously people can't afford even the basics like food, which, you know, it's possible this year. Now the other one is the inflation where prices rise more than 10% a year. So this can destabilize the economy. It pushes away foreign investors. It puts to shame government leaders. And this causes fluctuations in exchange rates. So this is when, you know, you start looking at DXY, the Dixie. So it's the index of the dollar
Mhm.
shift, I guess. But now, having said all that, those are all the types of inflations that are out there, right? Now,
Yeah.
deflation is when the prices fall. Now, when I say that's going to cost more, I mean it's going to cost more to the suppliers, the people who make the products themselves, or who distributes this, I guess, the businesses, and that has a trickle down effect. So, what this does is it's going to be difficult to see right in front of you because all prices don't fall uniformly.
Yeah.
So during overall deflation, you can have inflation in some areas, but not all. So deflation is worse than inflation.
Why?
But
Why? Because I mean, so they're both bad.
it depends on which side you're on. So
Right.
inflation is good if you are a business because there's more demand.
Yeah, makes
That's
sense.
how it works. But deflation would be bad if you are a business. So look at it this way. So when interest rates can only be lowered to zero,
Hmm.
they go negative, it's not good. So as businesses and people feel less wealthy, they spend less. Take COVID, for example. You know, you see most people don't, I mean, they're saying numbers are crazy, but I just, personally, I just don't understand how people are spending more. But as businesses and people feel less wealthy, they spend less, and that reduces demand. That means that prices have to drop in response to that.
Okay.
So what does that do in return? That gives companies less profit. So now once people expect price declines, they delay purchases as long as possible. So prices are set now and you're expecting them to get lower. So that means that you're not buying anything much later. And you may not even buy when they're low because you think they're going to go lower.
Hmm.
So they know the longer they wait, the lower the prices will be. And this even pushes it lower as far as demand. And it causes businesses to slash prices even more and more and more. And it's just a vicious cycle going down. So while inflation lowers your standard of living, if your income doesn't keep up the pace of rising prices, for example, your 2% inflationary rate,
Hmm.
then people buy things now before prices go up in the future, and that gives you economic growth and all that demand, right? Now, deflation would cost you your job. Could cost you your job, sorry. So if prices continue to decline, your employer is not able to remain profitable, and then that means that they can't keep you, right? So if they can't
Okay.
stay in business, then they have to start doing layoffs. So that's the problem that I can see coming due to what's been going on with COVID, for example, and not everybody being able to get some kind of relief. Now that everything's been bought up, I mean, is there going to be a demand, or is everything saturated to some degree in some areas? I don't know. But if deflation continues long enough, people definitely lose their jobs. The economy slows down. Companies go out of businesses. Company goes out of business, and that creates some kind of depression, not a recession. That's
Gotcha.
when we have
That
problems.
makes sense. Yeah.
That was like the 1920s things that everyone keeps tossing around. 1929, I think.
Yeah.
That's when everything goes bankrupt. So that's kind of my theory. It's a theory, doesn't mean it's going to happen. But everybody seems to be on the boat of inflation. I tend to be a contrarian. Since everybody's on one side of the boat, I want to be on the other side, doesn't touch the water. You know what I mean?
Yeah.
So both inflation and deflation are kind of under control of the US and the feds. You can also see it through the personal, I'm trying to remember the name. It's like it's personal consumption expense, no, personal consumption expenditure, sorry. There's an index on prices like that. And that gives you an outlook of business goods and services than what the CPI would be, which is current inflation rate. And that gives you like where the economy is at on the business cycle. Which
Okay.
you can probably look that up. It's pretty pretty interesting, the cycles to see there. But now, so how would you how would you shield yourself against any of these, whichever scenario happens? You know, what not financial advice, but what you would do is just have a well diversified portfolio. So you have stocks, you have, you know, would not buy bonds, but you would have stocks, you know, some kind of real estate. Just have different means of income, some cash flow, and just don't rely on all your eggs in one basket, kind of thing. That's just a rule of thumb, you know.
I mean, this sounds like a generally safe rule of thumb for any situation, right?
Yeah, like commodities, things like that. Don't get married to a single thing is what I'm getting at. But
Saying don't get married.
Don't get married to it. Well,
wasn't planning on it.
Pretty costly, man. I think I just happened to look this up. So fun fact, I think the average price of a wedding in the US was like $30-something thousand last year or the year before. Average wedding.
My God.
Oh, okay, there you go. In 2019, the Knot, they did a study and the average cost was $33,900. And this doesn't include a honeymoon or an engagement.
Yeah.
So if you want to get married, you know, have yourself 50 grand at least. Anyway. It's crazy.
Yeah,
it's such an interesting industry. But anyway, so on to our next article. Now that I talked your ear off on deflation. So we have another New York Times article. We have Tesla accepting Bitcoin as down payment. I'm sorry, Bitcoin as payments. And Elon Musk tweeted about this, right?
Yeah, I mean, this is pretty interesting though, because as I was reading this article, I was a little curious and confused, I guess, about the point in the article where he's talking about that the price of the car would rise or fall. So are they saying that he's going to set the price of the car in Bitcoin and therefore it'll fluctuate with the valuation of Bitcoin itself? That could be extremely beneficial to some people, but then it could be really detrimental to some people. You know, you're saying like if it fluctuates anything like Bitcoin, a Tesla could cost, you know, anywhere from $50,000 to $60,000 within the same week.
Yeah. I'm not too sure how that's being controlled, to be honest. I think we should wait and see what the specifics are on any terms and things like that. Like, is it at set price per year, a set price per quarter? I'm not really sure, because Bitcoin's obviously very volatile still.
Yeah.
But I think the main takeaway from this is actually the fact that Tesla is going to keep the Bitcoin and not exchange it for cash, which is huge because that means that it's bringing mainstream adoption to this space, this cryptocurrency space. So that's a first. Yeah. That's a real first.
Maybe that's what they mean by the comment that the price of the car could well rise or fall over time. That although he may be accepting some set value for each car and then getting that Bitcoin representation from said customer, and the fact that he's holding it means that he could sell a car for, let's say, $30,000 or $36,000, and someone pays in some portion of Bitcoin, since it's way above that right now. That as the Bitcoin rises, that car is giving him more revenue just off that one sale, which is pretty interesting.
Yeah. So how I can see this working is, since not everybody is using this type of currency, if you will, people are still debating that for some reason. But if you're not using Bitcoin and you're still using the dollar, for example, I can see them setting the price in the dollar and then adjusting I guess a decimal to, well, it's over the car's value right now, so yeah, it would be a decimal, to a single Bitcoin. So it could be like 0.8 or something, whatever the price may be, and say, okay, so we're charging, for example, $50,000 for this Tesla. were charging 0.9 Bitcoin at the time, and that fluctuates whenever you buy the Bitcoin.
Yeah.
Yeah, it could be beneficial to some consumers in that sense. You can wait until there's a drop and I'm gonna go buy Tesla now. It's a little cheaper. It's on discount versus Bitcoin, but you can still buy it in cash. But those who pay in Bitcoin, their Tesla is going to keep the Bitcoin from the payments. It's
Mhm.
very nice. Now you had mentioned something about this Bitcoin using up electricity. You found something.
Yeah, which I thought was kind of ironic because the same article talks about how Bitcoin uses more electricity per transaction than any other method known to mankind. And they're referencing how it's, it could be a climate issue, which is funny because it's an electric car. So I actually looked this up too, and I found this other article from Bloomberg. I didn't want to, the New York Times has an article on it as well, but I kind of wanted to change up the bias here. But so this article is from the 26th of January this year, and it's talking about this rise in Bitcoin and whatnot, that the miners and all the resources it takes is just like overwhelming the computational power. There's one point here where it says, if it were a country, the annualized estimated carbon footprint would be comparable to New Zealand's, which is about 37 million tons of carbon dioxide, which is pretty wild to me. I mean, I don't know if this is we don't know if these are actually facts or not, because the article continues on to say that that these are just arguments and estimates, but I don't know. It seems like an unfair comparison, right? Because especially with the stimulus, this whole 1.9 trillion and the prior stimulus reliefs, those are all done digitally as well. And if you really do like kind of the butterfly effect of how all of these transactions and all this money that has to be held, and it's kind of an argument for Bitcoin in of itself, because we're still on this quote unquote dollar and this physical currency. So you have to design the currency, you have to make the molds, you have to print the money, you have to distribute the money. Most of the money is actually just held digitally in banks, and those banks have these massive servers, I'm sure, that are running 24/7 with redundancy. And then all the transactions, all the smartphones you need to do these transactions, and all the ATMs and all the brick and mortar establishments. Is it really compared to Bitcoin? I don't know. And I'm sure there's so many more other aspects that aren't being integrated into this quote unquote carbon footprint. It doesn't necessarily make sense. But if you have, however many Bitcoin miners with massive processors and these big server farms and all this equipment, but there are no brick and mortar establishments per se. I mean, there are, I guess you could say that those server farms are the brick and mortars, but there's no central bank. That's the whole point of this cryptocurrency, no?
Yeah. But I think as more technology gets developed and we have more of this renewable resource kind of thing. So, for example, Tesla, they could help out with miners and their efficiency issues, or how to get their electricity much cheaper or more efficiently.
Right.
So this could go much lower. It's just a matter of technology growth, which increases over time. It's logarithmic.
Yeah. It seems to be part of Musk's master plan, if you will. I mean, he's buying so heavily into Bitcoin now. He's using Bitcoin to or using Bitcoin as a gateway to purchase his vehicles, and he is, where Tesla in of itself is the company that's pushing more and more electric resources, solar panels, gigafactories, and all these things. They just seem to kind of go hand in hand. So I really wonder what his ultimate goal is here. He has to be doing this for a reason. It doesn't seem like it's purely just investment.
Yeah, I'm not sure. I would subscribe myself to there's like a global currency thing, but it might be And there might be something to it.
Yeah.
But I just want to throw in a fact there. So 90% of the carbon footprint of cash is related to ATMs.
Interesting.
Yeah, which I find yeah, I find that interesting too, because a lot of payments are online.
Yeah. ATMs are more instantaneous and physical, and there's a lot of people that, I don't know, don't trust cellular technology. I don't know. That is an interesting that's an interesting fact, because I haven't used an ATM in a while.
Yeah, me neither.
Actually.
You know what's interesting though? It's to that. My mom hasn't opened. Just share something personal, I guess. My mom hasn't opened a online bank account. She still has the regular checkbook thing. She's just asking me if to check up on her bank thing, and I'm like, I have no idea because I can't check your balance. And do you have an online account? I can just check it online with, like, I can help you figure that out. She said,
Yeah.
no, I don't trust it. I'm like, interesting.
Funny.
Yeah. So
Well,
that.
Speaking of Bitcoin, do we want to transition into the
Yeah.
TA talk?
We go live in 5, 4, 3,